Howdy there, folks. Welcome into today's video. I have some stocks that are going absolutely out of control right now. We got to talk about what's going on with those stocks, why they are completely out of control. I want to share some perspective and opinions on that, okay? At the front of this video, we're going to talk about the dynamics in the market and what's happened recently. A lot of people have seen some of the big tech stocks falling, a lot of the big dog companies falling, and want to know, like, what's going on here? So I want to explain kind of the market dynamics, and I think this could definitely help folks understand not just what's going on in the market and why certain stocks go up at certain times or certain stocks don't go up at certain times and certain stocks are shooting to the moon and all those sorts of things. But I feel like this gives you a little level of, let's call it comfort and kind of understand some of these things, because I definitely get questions all the time like, why is this stock going up so much? Or why is this stock going down so much? There's no news. Like, what's happening here? A lot of times it's bigger stuff than just like news or no news in regards to a stock. Okay. Appreciate everybody joining me. As always, thanks so much for being here. Thank you for being subscribed. A lot of stocks to get into in today's video. Okay. So where I want to start out here, this is something I came across a few days ago. Goldman Sachs estimates there will be $9 billion to sell for equities at the end of the month. So basically rebalancing that happens in the last few days of a month, right? So when I read something like that, it makes me say market's probably going to be down in the last few trading days of the month up until probably like literally within 30 minutes of market close at the end of the month, okay? And so if we look at the 27th, November 27th through this afternoon, remember this is the last trading day of the month here, okay? If you look at a stock like Amazon, for instance, it showed a lot of weakness up until the last 30 minutes of trading. And wait till I show you that phenomenon that happened. And all of a sudden, suddenly in the last 30 minutes of trading, stocks went absolute beast mode. Just wait till we get into that. But if you see, it's very clear there was consistent selling and selling and selling and selling and selling in Amazon stock over the past few trading days here. NVIDIA, same exact thing. A consistent selling and selling and selling and selling. And, you know, even as buyers would step in and buy the dip, it would just go lower. It would just go lower. Every single basically dip that was bought, it just ended lower and lower and lower all the way through until almost the end of the trading day here today. Look at Meta stock. Same exact situation. Every single dip that got bought in Meta was sold heavier and heavier and heavier all the way through to basically early afternoon. But then check this out. This is insane, okay? This is the last check out specifically the last 30 minutes of trading. This is the entire trading day, right? All these big tech stocks just went lower and lower and lower until the last 30 minutes of trading, okay? You pull up Meta, Amazon, NVIDIA, Google McDougal, Tesla MyEsel. You can pull up the Qs in general, and you will see consistently that all of these stocks, every single one of these stocks across the board, that last 30 minutes of trading, they all popped huge. To kind of put it to you even simpler, I took a few stocks out to just kind of show you the illustration of this overall. We're looking at Meta, Amazon, NVIDIA, and the Qs right here, okay? And this is the last, like, roughly 30 minutes of trading. And look at that. Every single one of those stocks shot to the moon right at the end of the day, right? Now you might say, well, okay, why is that happening right before the end of the trading day? There's a couple of reasons why that's going on, okay? The first reason is tomorrow's December 1st. Now you might say, okay, what's the big deal? The first of the month, okay? It's an interesting phenomenon that happens the first of the month. So the first of the month is usually a very good day in the market, okay? The first trading day of the month effect is recognized phenomenon where the stock market, specifically the S&P 500, tends to perform significantly better on the first day of trading of each month compared to other days in the month. And there's many theories about why this happens. Some of those theories are around funds needing to buy the first of the month. There's theories around, well, if everybody thinks the market's going to go up on the first day and it's going to be a great day, then everybody buys in the morning and magically it becomes a self-fulfilling prophecy of a great day in the market, right? But there's many theories on why it happens, but the bottom line is it does happen. It is something that happens. So naturally, guess what? People are going to try to front run that. Remember, a lot of these people in the market are looking for arbitrage anywhere, right? Many of the market participants are not long-term investors, aren't thinking about the next 3, 5, 7, 10 years worth of stock. They're thinking about the next 3, 5, 7, 10 minutes and how they can get some arbitrage on that. So if you have an opportunity where people understand there was just a massive amount of selling pressure because of rebalancing, right? Tomorrow's likely going to be a good day in the market. Well, guess what? In the last 30 minutes of the trading day, guess what everybody's going to do? They're going to buy Meta. They're going to buy Amazon. They're going to buy the Qs. They're going to buy NVIDIA because they're saying, I can probably make myself 1% or maybe even a few percent tomorrow. And that's in a day. Now, if you add that up on a large amount of money, let's say you got a few $1 million to play with, a few percent goes a long dang way. Now measuring our $10 million fund, $50 million fund, $100 million fund, right? We're not talking about small amounts of money here, okay? Now to add more to that, guess what? It's the 1st of December tomorrow. December is usually roughly the best month in the entire stock market, right? Usually December's, if you look at throughout history, like December's at least one of the best months, if not the best month. If you look at the past many decades over time. So you're talking about one of the best, if not the best, month in the stock market for December. The first day, you just had a big rebalancing that happened. Like, I can understand why a lot of traders were going ahead and buying up the market in that last 30 minutes of the trading day. Like, just makes sense. If I had to predict, will the market be up or down tomorrow? My prediction will be the market will be up very nice tomorrow, specifically NASDAQ stocks. Those are the biggest weights, okay? Here's the deal, okay? My Magnificent Seven, where do I think these stocks, if I had to guess where these stock prices will be at the end of the trading day tomorrow, my guess is this. My guess is Skyworks is $97.50, PayPal's $58.50, Palantir's $20.40, Elf's probably $121, Amazon's probably $150. Tesla's a big wild card tomorrow because of, obviously, the Cybertruck event and options. Tesla's could be wild tomorrow. So I have no prediction on that. And Meta 333. That's where if you force me to make a prediction on where those stock prices will be tomorrow at the end of the trading day, that's where I would kind of predict them overall to be, okay? So the thing you got to understand about the market, there's many things going on that have nothing to do with company fundamentals. They have nothing to do with income statements and balance sheets and forward PEs and even the Federal Reserve. Sometimes there's rebalancing going on. Sometimes there's a bunch of funds buying in at a particular time, and don't matter what happens, that market's going up in the short time. Sometimes you have people understanding, oh, we're going into a month that's great. Well, why not go ahead and buy when you're about to go into that month? Oh, the first of the month is usually, one of the best days, if not the best day for the stock market. Oh, why not buy, right? Remember, a lot of people are looking for small amounts of arbitrage because small amounts of arbitrage in the market can add up to big numbers over time, okay? Not a game that I care to play, not my thing, but you got to understand the game that other people are playing out there, okay? Very important. Now, there's some stocks I own personally that are making just ridiculous moves. Like, it's mind-blowing for these moves, and I'll explain what's happening with these stocks, okay? Honest is a perfect example. There's no news with Honest today. The stock was up 16.5% on no news. And the NASDAQ wasn't even rolling today. And the stock was up 16.5%. The stock's up 110% in the past month. 110%. I mean, if you can make 110% on a stock in 5 years, you're doing good for yourself. Like, that's awesome, man. Good for you in 5 years. This stock just did it in a month. Something is up with Honest. There's something going on, okay? Something going on. I don't know what. I don't know if it's a fund buying in a bunch of shares, maybe an activist fund of some kind. I don't know if it's some sort of situation where a competitor of theirs is buying a bunch of shares, figuring, they've had nice growth over the last 5-10 years and they can get growth in kind of the industries that they compete in. So I don't know what's going on, but there's something going on. You don't get a 110% move in a month without something going on beneath the surface, okay? Something's going on there. Something is up. I don't know what it is. We'll find out soon enough, but it's not right now, okay? Fubo's another stock that's making an insane move. This stock's a 42% mover just in the past month. I mean, it seems like just yesterday Fubo was a $1 stock, and now it's a $3 plus stock, right? The moves are pretty rapid in what's going on here, okay? Now, I want to show you a stock. It's very important to understand what's going on with some of these companies and the phenomenon, okay? So what I'm showing you right now is a company named BuildaBear Workshop. And you might say, why the heck am I showing you BuildaBear Workshop? Very important, okay? BuildaBear Workshop was a company a few years ago that was seen as a bankruptcy candidate. It was seen like a company that was done. It was seen like a company that was probably going to zero, okay? BuildaBear Workshop didn't go bankrupt. They didn't go under, and they made it through to the other side. And they actually got their business model in a very good place. And so the stock went from a $1 stock to a $6 stock in 12 months. In 12 months, it went from $1 to $6. Once it was like, oh, they're not going under. They actually got something going here, okay? And then it went from $1 to $24 in 3.5 years. 3.5 years from $1 a share to $24 a share. So I showed you guys this yesterday, but I added something extra here, okay? When a stock goes from disaster to bad, big move up in the stock. When it goes from bad to good, okay, big move up in the stock. When it goes from okay to good, big move up in the stock. And when it goes from good to great, big move up in the stock, right? Now, there's another category, which is basically bankruptcy. Now, this is a situation where a stock goes down to the dollar-ish level, right? Where, you go down to $1 something a share. Basically, Wall Street saying, we think you're going under. You don't go down to $1 without investors being convinced that you're going under. You're not going to make it, right? I mean, even going under 5, which puts you into technically penny stock territory, even under 5 is people are getting really concerned about the future of your business model. When you go down to $1, basically people are saying you're done. You're done. You're not going to make it. You're done-zo, okay? Now, what has just transpired here recently with Fubo and Honest when looking at their numbers is these companies went from companies that people thought were going to go bankrupt to now they're just disaster companies. Like their financials are still a mess, okay? Honest isn't quite as much of a mess as Fubo is in terms of the numbers side, right? But it also doesn't have the growth side that Fubo does. But basically, I don't think most people are convinced Fubo or Honest are going under at this point in time. Most people are okay, those companies are going to make it through. Fubo got their financing. They're starting to cut down their losses big time. Honest has cut down their losses in a massive way. They've got their cash flow in a much better place than it was even 6 or 12 months ago. And so people have begun to, come to the belief that Fubo and Honest, they're not going bankrupt. They're going to make it through. And so now they're just kind of put in the disaster kind of point. Let's just call it that. Now, if the companies continue to improve on their financials, then what will end up happening is they'll go from a disaster to just a bad story, and they'll see another big move up in their stock price. That would be a Fubo probably going to $5+, Honest probably $4+. If next quarter they come in with, even better, like everything's better across the board. Their margins are better, their profitability's better, their revenue's better, everything like that, plus a good conference call. Then if they can go from a bad situation the next quarter to an okay situation, you'll see Fubo go to 8+, you'll see Honest go to 6+ at that point in time. And you can begin to kind of play that game. And then if the next quarter they go from okay to good, and you can, see how this all plays out, right? It's a process, folks. It's a process. But, companies like that, man, their stocks can move just ridiculous because they're priced for the end of the world. Literally the end of the world. Done. Zero. Like Robert De Niro. You go down under $1, you're basically being priced at zero. They're basically saying you're done as a company, right? No, I was looking at some Fubo Google Trends here recently, and strong like Donkey Kong. I will say that. Google Trends looking very strong for Fubo, which means there's a very decent probability Fubo is going to come in and beat again next quarter. Revenues and subscriber numbers, and I think there's a high probability they also beat on profitability next quarter, and that's a big difference between this last quarter. I think their bottom line is going to be in a much better place because many of the customers that signed up in the September quarter signed up in September. So Fubo didn't really get to recognize that revenue in a major way over all the different months. Whereas this month, you got October, November, December in there. Plus, guess what's the best time of year for advertising? October, November, December. So I think Fubo's likely going to come in with beats again next quarter. Subscriber numbers, revenue numbers, profitability numbers, which then could lead them to better guidance as well, okay? Google Trends is strong like Donkey Kong here. Now, something that's a little food for thought in regards to this whole situation, right, is keep in mind, people are fleeing these different services. The big cable companies, the Comcast, the Charters, the satellite companies like the DirecTVs, the Dish Networks, they're all flooding out of those and are going to continue to flood out of those over the next several years. And they're going to flood out by the millions over this next few years, okay? People don't want to have to sign up for that cable. They don't want to be signed up for satellite. They don't want to be in these long contracts that never expire and it's super expensive and, it's like I got to sign my name on the dotted line for the next 2-3 years or whatever. They want to, if I want to cancel, next month, they want that, right? And they want to be able to easily watch on their phones or their iPads or any devices. They want to be able to have unlimited DVR and all the things that ultimately, who are the two companies that benefit the most from all this, okay? Two companies, YouTube TV and Fubo. They're the biggest beneficiaries in the world. Fubo's about to go likely top 10 in the next year or two in regards to the company with the most subscribers. And I think when it's all said and done, they're going to be a top 5 company. They will benefit the most. And let's be very clear. People will continue to flee these cable and satellite services, and Fubo and YouTube TV will continue to pick up subscribers by the millions over this next several years. Now, the way Fubo, I've been looking at kind of what they're doing behind the scenes and whatnot. I think it's genius. They're working like exclusive deals with For instance, this one came out, what is it, today? Florida, Fubo partners with the Buffalo Sabres, which is a hockey team, right? They've now partnered with the Boston Bruins, the Boston Red Sox, Cleveland Guardians, the Florida Panthers, Nashville Predators, Pac-12 Conference, St. Louis Cardinals, Seattle Mariners, Chicago Sky. I'm just watching them kind of do all these different partnerships, and it's genius because they're able to get big fan bases to use Fubo and be known as like, this is the service of my team, which is Fubo, right? And I think they're out hustling YouTube TV a little bit because, YouTube TV is obviously owned by Google, right? Well, YouTube TV is really owned by YouTube, which YouTube's then owned by Google TV. So it's just one segment in a massive company where Fubo is able to be scrappier. That's just the way it is. They're just able to be scrappier, and they have to be scrappier. They're the little guys on the block compared to somebody like a YouTube TV, right? And to tell you kind of my story on how I signed up for Fubo TV a couple years ago and start using the service is, I'm a big college football fan, and every year I bet several different players to win the Heisman Trophy, which, by the way, I won it last year with Caleb Williams, and I might win it again this year. I need Bo Nix to play really good Friday night. If he plays really good and they win that game, it's basically a guaranteed thing that he'll win the Heisman. I'll win like $2,000 or so. So come on, Bo Nix, come through for me, baby. But I love to watch this, right? And so Fubo, how I got signed up for them is they have the most games, the most college games. College games are on all these different networks. Also, they have multi-view. So I can watch 4 games at the same time, and I can pick whatever 4 games, not like a predetermined one. Like YouTube TV's tried to launch a multi-view recently, and they totally screwed it up because they basically forced you to watch a certain, like, this game, this game, this game. I want to pick what I want to watch. And if I want to have 3 screens on games and another one on something random, a show or whatever, I want to be able to do that, right? So that's where Fubo TV is magical, because I'm able to watch a ton of different games at the same time, right? And so that's how they won me as a customer. So they're just kind of a little bit scrappier. I wouldn't say a little bit, a lot scrappier than somebody like YouTube TV that's just a big dog. YouTube TV, they're big. I mean, they're just a big company. They're just one segment in a massive company, right? And I even look at what they've done recently with Sunday Ticket. YouTube TV got Sunday Ticket. I'm sure they paid a bunch for that. They've been promoting it like crazy. But Sunday Ticket's not what it was 15 or 20 years ago. 15 or 20 years ago, Sunday Ticket was the best, man. I remember my brother got Sunday Ticket back when we had Dish Network when I was, probably in middle school. That was the freaking best, man, because you got to watch all the different NFL games. Now it's not nearly as big because nowadays, this is probably 10 years ago or so, they launched Red Zone, either 5 years ago or 10 years ago, which takes you around to all the different games. You don't have to worry about flipping back and forth to this game, that game, to that game, to that game, right? And so Red Zone is what you actually want nowadays. So like if I put on NFL games, I'm not the biggest NFL fan, I'm much bigger college, but I'll put the 2 games that are on, I'll put NFL Network, and then I'll put Red Zone all on at the same time, right? So anyways, we'll see how they compete over time. I'm never expecting Fubo to beat YouTube TV, and they don't have to beat YouTube TV. All they got to do is become a massive giant in the space and have millions of subscribers, and that money pouring in every single month, and then their advertising revenue is going to be off to the races, and it should be good stuff, okay? No, O-Man posted this inside the private group here today, okay? I thought this was really important. The Chicago PMI is blasting off to stratospheric levels, hitting a whopping 55.8 in November 2023, way above the expected 45.4%, or 45.4. This isn't just growth, it's economic hyperspeed, right? And all these economic numbers are starting to come in way better than anybody anticipated. And I'm talking even the most bullish bulls were not expecting some of these economic numbers to start coming in the way they're coming in. But I'll put it to you like this. It's magical what can happen to the economy when the consumer stop being destroyed by inflation. And what we're seeing now recently, in the past few months, is the consumer's no longer getting wrecked by inflation. The consumer got wrecked for like 2 years by inflation, and it finally started to come to an end this summer, okay? And it's amazing what will happen to the overall economy when people just aren't getting screwed over by inflation every day, okay? And so this is a huge phenomenon. Wages continue to go up. Job market continues to be pretty tight. Actually, I'd say very tight. Anytime you're under 4% unemployment, you're very tight. And this bodes very well for the consumer. This bodes very well for their spending and for the economy. And so if you continue to get these strong economic numbers, I think it's going to be pretty shocking what's going to happen to the stock market, what's going to happen to the Russell 2000 in 2024, okay? Now, Wall Street's making an epic mistake, And let me show you, okay? So what I saw recently, and this was something they showed on CNBC, Around 92% of Wall Street participants were expecting rate cuts of some kind in the first half of 2024. Okay, wait a minute. I'm not convinced that all that's happening. If you're talking about an economy that's going to fare far better in 2024, I don't think the Fed's going to be in any rush to cut rates. The Fed's going to start looking more at cutting rates if they really start to see some true softness in the economy. And I think there's a pretty high probability the economy strengthens in 2024. When I look at everything I'm looking at here, and I'm also taking into account like inflation stopping hurting people, real wages continue to tick up, I think we could see one of the biggest moves in real wages we've seen in history in 2024. I think it's very possible when I look at what's going on with inflation, what's going on in the commodity market, which is nothing, and when I look at the increases in wages people are getting out there, and when I look at what's going on with the unions, I think we could see some of the strongest real wage numbers we've seen certainly in decades, but maybe ever in 2024. And so that's going to bode pretty well, I can tell you that much. And so I just wouldn't be banking on rate cuts anytime soon. Is it possible rate cuts come in 2024? I think it's totally possible. But seeing kind of what's going on in the economy after seeing those Black Friday numbers, the Cyber Monday numbers, not only that, pay attention to what companies are saying. Pay attention to what company numbers are, okay? The Magnificent Seven, everybody likes to talk about those. Think about these companies, okay? Tell me, is their business model dramatically better or worse right now than it was a year ago, okay? Tesla and Apple, I can't say their business models are better, although Tesla's actually still growing their business. Do keep that in mind. Although their margins are getting destroyed, profitability has been getting destroyed, they're actually still growing their business, okay? Apple's not really doing much. That's Apple specific. Amazon, dramatically better than where they were at this time last year in terms of their business model, not stock price, business model. Google, significantly better than where they were at this time last year in terms of their business model. Meta's night and day difference in their business model this year versus last year. NVIDIA, it's hard to even explain how strong NVIDIA is now versus where they were at this time last year. I mean, incredible. Microsoft, same exact situation. So you go through all the biggest big dogs and look at their revenue numbers that are starting to come in. Look at their guidance numbers. Look at Meta's guidance for this quarter. And I'm getting, spoiler alert, they're probably going to beat no, they're not probably. They're going to beat revenue and earnings per share, and by probably a pretty significant margin in this quarter they'll report at the end of January, beginning of February, okay? So take all this into account. Take into account real wages and what's going to happen to real wages in 2024. Take into account what the biggest companies in the world are saying. Take into account those Black Friday numbers and those Cyber Monday numbers. Take into account the Shopify numbers they just posted, which Shopify reported, by far and away record numbers. And it's shocking, like how much stronger the business is than anybody anticipated, which Shopify is small business. So keep in mind, consumer confidence is going to likely pick up significantly in 24. Along with small business confidence, which those have been in the dumper for the last 2 years. Lot to keep in mind here. I would not be banking on rate cuts in 2024. It's possible, but if you're banking on that in 2024, don't. Next up here, I want to share this with you guys. I shared this in the private stock group in Breadcrumbs tab. I said, from what I heard, the biggest lesson Charlie Munger taught Warren Buffett was focus on buying quality companies, not just what is cheap. Warren Buffett loved to buy what he called cheap, or whatever was cheap on a PE basis, right? He referred to them as cigar butts. The Munger and Buffett partnership was magical as a combo of Buffett wanting to find undervalued assets, cheap companies, right? While Munger was about quality. If you look at many of the bigger stocks they bought over the past several decades, those stocks were bought at fair value, or maybe even a little bit above fair value, but they're all high-quality companies. You look at Berkshire's portfolio of stocks, and they're among the highest quality of high quality, okay? That can be a lesson for us all. Quality at fair value or a little rich is better than cheap for cheap's sake. Rest in peace, Mr. Munger, okay? And, if I think about kind of the public account and whatnot, right? If I think about some of the stocks I've done the best in over time, like these weren't just cheap companies. They were quality companies that were either trading at fair value or cheap when I bought them. Now, Meta was a rare circumstance of getting to buy a super quality company that was also cheap. But for the most part, that doesn't happen. No, that's a magical situation. We're up $372,000 on that. We'll be up $500,000 on that. We'll be up $750,000 on that in the future. Like, it's going to keep going, right? Tesla I think it was very debatable if I was buying Tesla at a cheap price when I bought that. Right now we're sitting on a 917% gain. I think it was very debatable. When you think about the time period I was buying Tesla back in the day, a lot of people thought it was expensive. And it was about a 30, 40, maybe $50 billion market cap or so. But when I looked at Tesla, I saw a company that, oh my gosh, I was like, this is very cheap compared to what their net income they're going to produce in a few years out is going to be. And so that's the way I looked at it. But you couldn't necessarily say it was a cheap company. I was actually losing money at that particular time, right? Amazon was not cheap when I was loading up on these shares. We're already up $40,000 on Amazon, and we'll be up a lot more in future years, but it wasn't cheap. Look at the forward P when I was buying Amazon. It doesn't necessarily scream cheap, right? It's high quality. You got to pay up for high quality. Is there higher quality than Amazon? I don't know. Elephant on the shelf. You know, when I bought the stock, the share price looked cheap because it was like $7 something a share or whatever, right? But technically, you couldn't necessarily say the valuation was cheap because this is another one that they were going through some really tough times financially. But I looked at this company and said, this is actually a really good company. They're just going through a little bit of a tough time here in the short term. They'll get through it and they'll make it out to the other side, right? Now we're sitting on a 1,522% gain. And I bought some quality ELF shares even recently. Not in this account, but I bought it in another account because I looked at ELF and I said, this is so quality, and it's still, I think, got a huge runway over the next 5-10 years. And so I got to add some more shares of the stock, right? Sometimes you got to buy quality, and I'll put it to you like this, right? Which burger would you rather have? I can give you this moldy one over here, and I'll sell it to you for super cheap. It's 10 cents. I mean, 10 cents. Yeah, it's got some mold on it and whatever. Who cares? It's 10 cents, okay? Or would you rather have this fresh burger over here for $2, right? I mean, one seems really expensive. This one over here for 10 cents is so cheap. You know, it's a moldy one. It's probably going to get you sick, and you know, probably won't be liking that so much, but it's really cheap. This is the same thing in the stock market, right? You can get offered stocks that are moldy stocks for very cheap, and it's like, wow, this is such a cheap forward P or current P or whatever, right? Price to sales ratio. My gosh, the stock's cheap. Just because it's cheap doesn't mean it's a deal. Just because it's cheap doesn't mean it's a deal. And just because it looks a little expensive doesn't mean it's not a deal. The first time I ever looked into Amazon, which was probably 2010, 2011, I'm talking in a serious manner in terms of really thinking about buying Amazon stock. The first time I ever looked at it, the stock was very expensive. It's very expensive. On PE basis, guess what? The stock was insanely cheap. I wish I was loading up on Amazon 2010, 2011. One of my best stocks ever, Monster Beverage. That was a stock that I thought I was paying. Actually, I thought I was getting a little ripped off when I was buying my Monster shares. I didn't feel comfortable. I was still buying them because I believed in the company that much and I knew where the financials were going. But still, for me, when I was buying Monster shares back in, gosh, I don't know, 2010, 2011, whenever that was, like I thought, man, I might be overpaying for this company because it was like at, I don't know, a 25 or a 33 or something like that PE, and it was actually extremely cheap. Like, look at what Monster stock price was back in 2010, 2011, 2012 versus nowadays. It was extremely cheap. I was actually getting a very cheap Monster beverage at that time, okay? So, yeah, I think that's a little food for thought. The quality matters significantly in the stock market. You know, you're only going to have a portfolio of, 10, 15, 20 stocks? Why not have the best quality you can possibly have in that portfolio, especially with your biggest positions, right? If you want to take some risk in some smaller positions, okay, fair play. But in your biggest big dogs, you want to have the most quality. Look where I have look at the stocks I have the most money in. They're the quality of qualities. The Metas, the Teslas, the Amazons, the Elfs, like these are the biggest qualities, okay? So just a little food for thought, and I just thought that was a gem by Mr. Munger there, okay? Appreciate everybody joining me as always. Thanks so much for being here. Thank you for being subscribed. If you're looking to apply, join my private group, then check out the pinned comment down there. You can fill out an application. We can see if we can get you in there either this weekend or maybe next week. You get access to all my different course curriculums. You get access to the 6- and 7-figure Discord chat. You get to see the moves I'm making, my nearly $2 million Fidelity account, plus a bunch of other great things. That's pinned comment down there to fill that out. Much love and have a great day.